Welcome. We'll get started shortly. Before we begin, here's how to earn continuing professional education credit for attending this session. There are no polling questions or attendance checks. Instead, you will demonstrate your knowledge by taking a brief multiple-choice quiz using the Earmark app. Visit earmark.app in your web browser. You can also download the mobile app by scanning the QR code on the screen. Log in, or if you're new, create your free account. Be sure to use a valid email address because that's where we'll send your course completion certificates. From the home screen, scroll down to find the course. You can also tap the magnifying glass icon to search for the course. Tap on the course artwork, then the Enroll button. On the Course tab, you'll find the recording and quiz questions. It takes us a few days to create the course on the app, so if you are attending this session live, please wait a few days. We'll email you a link to the course when it is ready. If you have questions or need help, email us at support@earmarkcpe.com. And now, on to the event. Buckle up, accountants. It's time for another Earmark Expo, where we're taking the latest accounting tech for a test drive. I'm Blake Oliver, CPA, joined as always by my co-host with the most, David Leary. Hey, David.
Hey.
Here's how this is going to work. We are going to floor it with a live demo of a game-changing app. David and I will be in the driver's seat, putting this app through its paces and asking the tough questions every accountant wants to know the answers to. And guess what? You're along for the ride. We want you, our live audience, to help us navigate. Ask your questions through the chat, and we will highlight them for Andrew to answer. This is your chance to see cutting-edge accounting tech in action, get your questions answered in real time, and gain insights that could transform your practice. So take a seat and let's roll with today's Earmark Expo.
Blake, I'm not sure what your experience is with RevRec, but for me, I have experience, but none of it's accounting related.
What kind of experience are you talking about?
So when I was into it, there was always things you couldn't say to customers in tech support. Like you could never say, we'll fix that soon, or we're adding that to the next version of QuickBooks. And like basically all the patches that came out for QuickBooks Desktop would somehow affect revenue rec in some way, like software sales. I didn't ever really understand it. I just knew it existed. And then when the QuickBooks App Store came out, we'd have to charge developers $5 a connection a year for their QuickBooks Desktop customers, because I think those sales already happened. And if you gave them a new feature, it would have to restate all the earnings. I didn't really fully understood it. And I think the main reason why I've never understood RevRec or never learned it is because it was never a feature of QuickBooks. I only know about accounting based on what's built into QuickBooks, as probably my educational level. But today we're going to see an app that will do RevRec for QuickBooks.
And I'm excited because when I was doing accounting in QuickBooks and in Xero, there was no RevRec module. And I remember I had one startup client in particular that sold annual subscriptions to landlords, building owners, for sustainability software that would measure their impact of their sustainability initiatives, like how much carbon are these buildings emitting and all that. And we had to do that all in a spreadsheet, and it got bigger and bigger. And as that company grew, we got more and more lines until it became like a really complicated thing that I would inevitably not be able to tie out, and I would have to do a bunch of rework. So I'm excited to see what and how we could solve that for QuickBooks users from Andrew. Hey, Andrew, welcome.
Yeah. Hey, Blake. Hey, David. Thanks for having me. You guys just really teed me up perfectly, because those are the exact things we're looking to solve for. And really our customers are experiencing all of that same issue that you had in your previous lives. So the fact that QuickBooks and other ERPs don't have those revenue modules, or just the fact that a lot of companies still do revenue recognition manually out of massive spreadsheets, that's really what we're here to solve for. And
we're going to learn too, because we have a startup now. Earmark is a startup, and we sell annual subscriptions. So, we haven't done it yet, but if we, want to go on and raise more money and grow bigger, at some point we got to have those GAAP financials. So it's kind of in the back of my head as something we got to solve.
Absolutely. And like you said, as a startup, it's probably not as prevalent, but ASC 606 guidelines are stringent. And once they kind of come into play, you'll definitely need some sort of solution.
And I imagine that's like when you want to go get a bank loan, you got to have GAAP financials in a lot of cases. cases, or at least semi-GAAP.
Mhm.
And same thing with like raising institutional money. If you're a startup, you want to go get VC
Absolutely.
money, they're going to demand some GAAP financials at some point.
Absolutely.
Well,
The second you need that auditability, that is where you're going to need something like a RightRev.
so is that like how RevRec, is that how your solution came to be? Like what was the genesis of it?
So actually, if you don't mind transitioning over to our slide, that's kind of the first thing I wanted to share is who we were built by and how we kind of came to be.
Awesome.
So we were built by our CEO and founder, Joggin Reddy. He actually had been working in the space back in the mid 2000s and realized there was this gap that you both just explained, that there's nothing out there that did any sort of revenue automation. So at that point, he started building and created a product known as RevPro. He kind of built that for the next 8 to 9 years and ended up selling off and kind of retiring into the sunset. Around that same time, though, that's when ASC 606 really came into place. All of those revenue automation practices kind of changed and were updated with those changes. And so he had been contacted by Salesforce, actually, of all places, saying that they didn't have revenue recognition on their platform. And so they were looking for something that they could plug in as a part of their billing and CPQ processes. And so that's really how we kind of came to be. But knowing that, we didn't want to just limit ourselves to working on the Salesforce platform. So we also built what we call our standalone solution, where we can connect with a variety of other platforms through API and get all of that information that we need to help you automate your revenue practice. And then just a really quick run through of what RightRev offers and kind of our core functionality and what we solve for. Obviously, revenue recognition is kind of the core of everything we do here at RightRev. Our goal is to really be your revenue subledger. And so with that, we can handle the most complex of use cases you might have. We're really built to be configurable, not customizable. And so with that, we can trigger revenue on a variety of things like bookings, billings. We have event-based recognition where if you have any other event that's triggering revenue, maybe it's delivery of services or like a percentage of completion, we can build rules within our platform to take in that information and release revenue for you. Additionally, the complexity that kind of comes with ASC 606 requires that contract modifications be accounted for over time as they change your performance obligations, and they may require you to reallocate those revenue carves that you're doing with discounting and multi-element arrangements and things like that. And so we were able to take in those modifications, adjust all of our calculations that we've done, and give you updated information going forward. Or if we have to correct things in the past, we can do that as well.
That's awesome to hear, because that was one of my pain points, was if a customer canceled midway through their term, the ASC 606, the revenue recognition rules, like it says you have to recognize the rest of the revenue from the contract immediately, or something like that. And that would throw off my spreadsheet every time.
Yeah, you either want to recognize that immediately or at least show that you're offsetting it month over month for the remaining term.
Yeah.
And so, yeah, we're able to take in those changes, cancellations included, and layer that information into one place for our users and our revenue accountants, really to help make their lives easier is ultimately our goal.
And then you have this image on the screen here. So are you a middleman before the data gets the ERP, or are you kind of working with it? Could you explain the diagram here?
Absolutely. No, thank you for alluding to that. So yeah, we are what I would consider kind of a middleman in the process. So again, we're trying to be that revenue subledger as a part of this entire flow of data. So we take what we call our upstream data from wherever you're doing like your ordering, quoting, billing. We're taking that information again through APIs, layering in our RightRev calculations and creating what I'll show you here shortly, what we call a revenue contract. And then once we have that revenue contract, using our rules-based engine, we're actually creating journal entries in our platform that we then sync to the ERP. So we do have all of the reporting and everything you would do as kind of a daily revenue accountant out of RightRev, but then we can sync that information via journal entry into your ERP, where again, they're not necessarily built to house reporting and things like that for revenue purposes.
Makes sense.
All right. With that, then I'm going to jump in to RightRev. Any questions or anything prior to us taking a look?
Well, let's see if I can understand what's here on the screen.
Perfect.
We've got the Revenue Desk 360 tab,
Mm-hmm.
and I see a revenue contract, and we've got recently created, we've got recently viewed, on hold, and most valued contracts. So this is like our dashboard
Absolutely.
of contracts.
Yeah, I like to call it our contract depository, so to speak, because this is where, again, we're taking all of that upstream data, we're then processing it through grouping rules to determine if we're creating a new revenue contract here or if we're layering on those amendments. We're then adding in all of that revenue rule criteria as well to determine how each item's actually going to be recognized. And so all of that's happening and creating these contracts as we go. And again, it's all an automated process through that API connection.
So you're using, let's say I'm using Salesforce,
mm-hmm.
and I'm creating orders. I'm fulfilling them with Salesforce. Is that where this data might be coming from?
It absolutely could be. That is one of the common places we solve for. And actually, like I mentioned earlier, we actually are built on the Salesforce app as well. So this is our standalone version. If a customer is doing all of that activity within Salesforce, we have a separate application that allows us to, without really any external integration, take in all of that information.
Got it. Do you integrate with other CRMs?
So again, we don't have any direct integrations, but we are built API first. And at this point in time, really, if any of those solutions have API capabilities, we've been able to get the information that we require.
Okay,
what
great.
about through like Zapier or something? Does that open the door?
Yeah, that's actually when we talk about some of those kind of future things we're looking to do, it's to kind of build integrations through things like that.
Okay, so right now it's if I'm like, I guess my question is, as an accountant, what CRM systems can my clients be using to use RightRev?
And my answer to that is really any. Again,
Okay.
as long as they have API capabilities, we can take in that information.
You'll build the connection.
Absolutely.
And then what if they're just using QuickBooks to like create invoices for contracts? They're not using like an order management system.
Absolutely fantastic question. So again, same scenario. As long as the billing is what's really driving the revenue recognition in that case, we can take in that data from QuickBooks. We can take it in from any other billing solution as well. Typically, what we do, even in this contract process, is a lot of companies aren't doing both their ordering and their billing out of the same tool. So because of that, we're layering in kind of a multi-level integration where we're pulling information from the order. We're also pulling information in from the invoice so that we can give you those contract positions of liability or asset, along with all of our revenue calculations that we're doing.
Gotcha.
And to pile on, we got another question that came in. Somebody asked about Stripe. Does it work with Stripe as well?
Yeah, we've definitely had customers that use Stripe.
Cool.
Awesome. Well, yeah, to jump in, like you mentioned, this is our contract depository. So as contracts get created, we can search them up here in our search bar to find specific customers, any related information. So maybe an invoice number, an order number, things like that. Before I actually click into one of our contracts, I did just want to show we are legal. We do have the ability to support multiple legal entities. And because we are acting as a subledger, we do have actual open periods for each of those legal entities. So we do have like a period close process that we adhere to as a part of all of our month-end activity. So once you lock that prior period, we're locking down those financials. Again, our goal is to give you auditability and make sure that things aren't changing. So with that, let's click into one of our revenue contracts here. So to start, I'll just kind of go over the face of this this object. This is kind of our core object where all of these calculations are layered. We'll get into some of the configuration later, but for now, every single one of our contracts when we create it is going to get a specific unique identifying RC number associated. So we can always find things, make sure there's no duplication, things like that. We're also going to track the version. It's a little smaller to see here, but because we're able to layer in modifications and kind of show changes over time, we're going to track that version as well as the most recent modification period, if there is one, because we have some reporting available to show kind of what has changed over the life of this contract and maybe where things have adjusted throughout the life cycle. We're then going to track things like customer name, currency. We do support multi-currency, again, the legal entity, and then when this specific contract was created. And then for all you CPAs, you'll notice the 5 steps of ASC 606 here. We're just kind of highlighting that really quickly as far as where we are in the process. What I'll say, though, is typically what we see is we start in this identified contract position, and immediately jump to the allocating of transaction price. The reason for that is that we're processing and automating all of those in-between steps for you. So we're identifying those obligations, using your rules that you've configured in the system to calculate transaction prices and allocate accordingly. On the right-hand side here, just want to speak to our core metrics that we're tracking across these contracts. Ultimately, the first thing we're tracking is that total contract value. And from a RightRev standpoint, this is going to be the total sales price of all of the items that we've taken into the system here. So in this case, I've got a $115,000 contract. We're then, as I mentioned earlier, pulling in the amount that's been billed to date on this contract. So again, whether this is happening in the same system or a separate system, we'll be pulling in that information to give us this contract liability here at the bottom. The next thing, again, the core of what we're doing is our revenue recognition. So this is actually how much revenue across this entire contract that we've recognized, again, through the month of October. And then the next two concepts might be familiar to some, might be unfamiliar. So they do work hand in hand, but revenue planned and revenue unplanned. Revenue planned means we have a performance obligation that we've either partially satisfied or we've fully satisfied, and we can start recognizing that revenue over time or immediately, depending on how that's actually configured. Revenue unplanned is the opposite. So it's where we're still waiting for some portion or all of that performance obligation to actually be completed to release revenue and start recognition. Things there would include like billing. Maybe we're waiting on some sort of billing to take place. Again, maybe we're waiting on like percentage of completion or delivery or shipping, whatever those metrics may be. It's going to sit in this revenue unplanned bucket until we satisfy those requirements.
So at a high level, I'm trying to process the concept of a contract. So if this is Netflix and Netflix has all these subscriptions of 200 million different people, essentially each subscription is a contract?
Yeah, that's one way you could configure it. I mentioned the idea of our grouping rules. It's really up to Netflix in that instance to determine, are they grouping it as individual users? Maybe it's region-based. They want to do things based on US customers or things like that. And they could have an infinite number of line items as a part of that individual contract. But instead of having maybe hundreds of thousands of contracts, they group them together in that form.
All the people that signed up in October might
Exactly.
be grouped together.
That would make sense.
Exactly.
Okay.
From here, just scrolling down the right-hand side a little bit further, again, this is kind of our core object, so I want to make sure we really take a good look at it. We're tracking some quarterly metrics around revenue, but then the more important thing I wanted to highlight here is our carves. So this is where we're actually doing those SSP and fair value allocations. They're based on the policies that we have configured in the system, but we're taking that information and automatically allocating across all of the line items in this contract to give you that net revenue position as opposed to that initial transaction price that was sent to us. To show that in a little bit more detail, we can see here this specific contract has 7 revenue contract lines. This is really where all of the detail that we take in lives. And so all of that integration from your upstream sources is piled into this section, and we're adding on quite a few metrics on our own to all of those calculations that we're doing. But as I kind of scroll to the right here, we can see we're tracking things like product, quantity, sales price, list price, and then subscription start and end dates. A lot of information, but I'm going to scroll a little bit further here. I'll start with our product and revenue triggers. So within each of these line items, we have a specific revenue treatment assigned to each of those. In this specific example, all of our revenue treatments are by product. So whenever this product subscription is sold, we know we're going to release that revenue and start recognizing based on the booking or based on like the contract start essentially. And then we're going to distribute that revenue as a prorated ratable recognition based on that subscription term that we received. So you can see we have a couple of products set up that way. We then have a couple of products here that use this event-based recognition process. So this first one is a hardware as a service. So our trigger is what we're calling a user-defined event. And again, through configuration, we can take in any number of event and actually release the revenue according to that. So this specific example for the hardware as a service is actually being recognized based on like fulfillment, I believe.
For example, the hardware was installed at
Exactly.
the customer site.
Exactly. And so once that's tracked upstream, again, through those APIs, we can link that to this contract and release revenue once that happens. It can be based on like a specific amount we receive, a formula like a checkbox or something like you said, a percentage, all sorts of different criteria and configuration that we can do, again, out of the box and not needing that customization to kind of get you what you need.
And I just want to highlight for David, who is the non-accountant in the audience, that like how cool this is, because it gets really tricky when you're dealing with something like a hardware as a service, because under accounting rules, under GAAP, you cannot start recognizing the revenue until that hardware, that machinery is in service. It's being used. It's available to be used by the customer. But you may have already invoiced for that a long time ago, and you may have incurred all these costs to like get the hardware to the site, to deliver it, to install it, train people on it, but you can't recognize any revenue until you actually put it in service.
And then I could see the communication gap or the systems gap. The person that installs it, they're so disconnected from letting the accounting department know, hey, we're done. We turned the switch on. Like you'd have to have some sort of input, right?
Exactly.
An API call, like whatever in the field software they're using, they say job completed, and then that should communicate back up. Because how are you supposed to know it's ever installed? Like you're not going to call the installer, right? Or I guess maybe you had to in the olden days. I don't know.
Yeah, and that's why if you don't have order management software, right, then it's really hard to know what's the status of all of these orders, because they can take months. There's sometimes even years to deliver. Yeah.
And Blake, you did a fantastic job for me of explaining, like, again, one of the benefits of what we're offering here. And just to kind of highlight what you had stated, this specific item here, I'm clicking into the individual item and we can see some additional information here, including invoicing. So on this specific item, we've actually invoiced $6,000, which I believe is that full contractual amount. But you can see because of our event-based recognition, we haven't actually released any revenue to start recognizing. So we're still waiting on some sort of event to happen for that to take place. And what I might also point out here is it might look a little weird here, but our contract value for this line item in our invoicing was $6,000, but our revenue available for recognition, our net cumulative revenue, is actually $6,900 because of those allocations that are taking place, because of discounts that are happening across this multi-element arrangement. We're able to allocate that and give you kind of all of the attributes that we used, including that SSP price, our relative percentage in comparison to that total contract value, to then give you that allocated amount in total cars that we're doing.
So that's really tricky too, because there might be some sort of discount or surcharge applied to the total invoice value that then has to waterfall down to all the line items according to accounting rules too. So 6,000 might not actually be 6,000.
That is the fun of ASC 606. And the reason for that is they decided, as they came out with that policy, is they don't want to see you maybe discount services, which happens quite a bit in the tech world. You're discounting the services piece, but not account for that from a revenue standpoint correctly. So
to get the subscription, which is the real value for the tech company, we're going to provide all these services and we're going to make it like 100% discount. I mean, under GAAP, you can no longer then you can't do that from an accounting perspective.
You can still sell that way, but you still have to then allocate a portion of that subscription revenue to your services based on that SSP, that standalone selling price. So just while I'm in this section, within each of these line items, like I said, there's some additional detail, and as we click in, our metrics change there. But we have our billings. We actually have the revenue schedule, which in this case, this is that product that's waiting for something to happen. So all we have is the initial entry. We haven't actually released anything yet. We then have some more detail around that SSP, same sort of information that we're tracking on the right-hand side.
And what does SSP stand for again?
So again, that's the standalone selling price.
Got it.
That's the amount you would sell this product if it was being sold on its own without anything else being included.
Gotcha. That's the $6,000 in this case.
Yep. Well, in this case, it actually is being calculated as $7,100.
Oh, because of the services or something that are associated with it. If you actually build for the services, the value of the services that are included, that's what it would be. Exactly. So that's like the list price.
In this case, that's exactly what it is. Our policy that we've set up is based on list price.
Got it.
And then I don't have any cost associated here, but we also have the ability to track cost and align cost with specific revenue items as well. So depending on what customers we're dealing with, that may be like COGS that actually drive RevRec, whatever it may be, we can take in that information and release the expense along with the revenue, or again, based on like events and things like that as well.
So what would be an example of that, like a COGS that would release revenue?
So the biggest industry we see that in is kind of like the construction industry, where
Right.
you're doing a percentage of cost method of recognition. So you're tracking that total estimated cost. You're then tracking all of these individual cost items, whether it's direct labor, overhead, whatever it may be. And then you're using that
Materials.
actual cost versus the estimate to determine how much revenue, that percentage of revenue.
Got it.
Yeah, so there's, again, a lot of information here within each of these line items. The beautiful thing about RightRev is we're built to report all of these things, because we don't necessarily see accountants living in this revenue contract on a day-to-day basis. You'll have hundreds of thousands maybe of these contracts, depending on the size of your company and how you do that grouping. So all of these metrics that we're tracking will have reporting available holistically to show all of that information as well.
So once I configure my buckets or my contracts, and I configure whatever those columns that were far to the right, I forgot what the two columns that you had, you showed us before.
The revenue trigger.
Yeah, the revenue trigger and distribution. I assume those are other lists with rules that get configured. So once that's set, I kind of just set it and forget it. I'm not, like you said, I don't have to keep coming in here and touching things because it's now working.
Exactly. And so we'll use that scenario every single time based on that rule that's been configured to determine the revenue treatment. The other thing, though, that's nice is that doesn't necessarily mean that all of your company scenarios fall in that same bucket. So when we configure our revenue rules, the way I've done it today is show you how they're configured by product. But we also have another process that we call our rules builder process. It's truly just an override process, and it allows us to be a bit more specific in our scenarios. So if we're not doing revenue recognition based on product, maybe it's based on region, based on like product subtype, based on a lot of different other factors. Maybe we're treating revenue differently for one customer versus others. You can configure all of those rules in our platform. And again, once that criteria is met, apply different revenue treatment based on each scenario. So it's really powerful in what you can do. It just allows you a lot of configurability to hopefully solve your revenue automation closer to that 100%. To be fair,
so I could invent my own gap. I could decide I'm going to invent some new accounting rules and program that into RightRev.
Yeah. So whatever you're trying to accomplish, you should be able to configure here from a distribution setup.
Got it.
And I'll show some of that configuration towards the end here.
So basically, once this is all set up for every contract, I just need to go in and look at my planned and unplanned revenue every month.
Yep. And then we'll have also some reporting around your revenue waterfall, which actually, let's just take a look at that. So we can show you that planned revenue in a waterfall format, where we're actually showing a schedule of revenue recognition over time. So
this is my spreadsheet.
Yeah, exactly. This is essentially your spreadsheet in a form here, and we can also export that into a spreadsheet for you.
That's David's number one ask. Every app, he says, can you export to Excel?
Absolutely.
It checks the box.
You can export to Excel, CSV, you can even do a PDF, or if you really want the underlying data, you can get a JSON file as well.
Awesome.
All different options for you there. One thing to point out on this waterfall is this initial view that I'm looking at. It's by each of those individual contract lines that we've taken a look at. And then each line is actually broken up into a couple of different categories. So we're tracking revenue that's planned, which is that future revenue that we expect to recognize. We're also tracking revenue that's actually been recognized. So since we've already run the process through October, we've actually done some recognition. But then we're also tracking those CARs. So this is just a breakout into the incremental detail. We can roll this up in any number of ways. We can just do it by line item and show all of these values on one line. But we also can break it up into the specific detail to show what that CAR revenue actually is that's being allocated from those other products.
And you can just collapse that line by clicking on one of those icons there. Yeah, that's great.
And yeah, no, our reporting is pretty powerful in that any of those metrics that we saw in those line items, we can pull those into our reports. And we have a lot of canned reports, obviously, that we're doing this, but it gives you some flexibility to add in different metrics that maybe aren't out of the box for us. We can add custom fields for you, And as long as that data lives in our system, we can pull it into any of your reporting. And then another report before we get into some of that configuration. I really like this one coming from an accountant background. It's just information I always struggled to get in one singular place. So this report, we call it our revenue contract metrics waterfall. It's somewhat similar to what we just looked at. But in this report, we're tracking those actual bookings and when they took place. So again, as we're doing contract amendments, as we're actually processing changes, we can see the schedule of when those came through month over month. I also didn't specify this in the original revenue contract. We're also doing a consumption revenue recognition item. And so what I mean by that is we're actually having a product that's being recognized based on usage that's taking place. And we're able to track that usage that's being ingested into RightRev and recognize revenue accordingly. What I'm meant to show on that one too is when this comes through from the order, from a consumption standpoint, you're usually not putting a contract value to that line item. It's a $0 item until you know what consumption is. We're able to take in that $0 line item and then update it over time as we get that invoicing, as we get that usage activity. So we can kind of continue to update that total contract value, continue to update how much is being recognized month over month. Then we're tracking all of that billing information and then that revenue schedule for all of the contract as well as the deferred revenue position. It's a powerful report just because it shows all of that information in one place. And with this being a new contract, it doesn't show a lot of that maybe history that will happen over time. But it's a great place to look back on the contract and kind of see what's happened. From here, I am going to get into some of the configuration. Before I do that, though, I do want to talk a little bit about our processes of actually integrating with the ERP and again, that close process. So as an accountant, like I said, you're typically not going to be living in these revenue contracts. You're going to let the rules apply, do what they will. If you ever did need to make adjustments, if there were manual kind of overrides that needed to take place, you can do those things here from our manual actions. So even if there's scenarios that kind of fall outside of that automation, we can take those on here. But then once all of that's completed, we actually need to recognize revenue. And so what that looks like for us in RightRev is we have what we call our journal run process. And so this is that workflow that will actually kick off journal entries into the ERP. So I actually ran this earlier today, but we are now in the month of November. So I'm going to click on this legal entity and we're going to create a batch journal entry. So what this is doing is it's searching all of those revenue contracts that we've created. It's looking for any of that revenue that has not been recognized here for the month of November or potentially for prior periods as well. So if we had received an order that had a start date back in July, we still need to be able to recognize that revenue here in November. So it's going to pull all of that information.
And let me throw a question at you that I'm sure you get a lot. What happens if it's in a closed period?
Absolutely. So it is going to pull into this current period, or actually here, let me click one step out of here. I'll get into our revenue rules and just show you.
Okay.
When we set up a revenue recognition rule, there's this idea of prior period revenue and how we handle that. So if we receive revenue from July, we can determine we're going to do a full catch up of July through October here in November. We can say we actually want to distribute that amount over the remaining term that we have on this line item. Or we can say, that term doesn't really make sense. We started revenue today because that's when we actually deliver the service or whatever it may be. And we can say we want to ignore that initial subscription term and use today as the start date and distribute the revenue over the remaining new term that we have.
That's great.
So yeah, fully configurable to kind of meet all of those needs that a company might have. Jumping back to this journal run. So again, once that's created, it creates a journal entry for us where we're tracking those debits and credits. This is a very summarized journal entry. We only have a couple of line items, but we're tracking by account type and account number here and giving you all of that detail. And then typically, this is where we would click transfer, send this information to the ERP, and it would post these debits and credits accordingly. Now,
and can I customize how this journal entry looks?
You read my mind. So this summarized version can't be customized, but we do have the underlying detail. And a lot of times our customers say, we do want to use RightRev as our reporting tool and our revenue subledger, but we still want some additional detail in the GL. And so for that, we have this detailed entry, and we can actually add up to 10 different segments of information into this. And so we can post on an individual contract level with all of that additional detail, or line item level, excuse me.
So if I don't have like what's the limit on the number of contracts?
There is, from our end, there is not. That's actually one of our big benefits is our volume capabilities.
Okay. So if I had an ERP that could handle this, like a NetSuite, and I wanted to post journal entries every month for every contract, I could do it?
Yeah.
Okay.
Absolutely.
That's cool because, like, as an accountant, when you're using a subledger product, I mean, there's disadvantages to summarizing, right? Now everyone always has to go back into the subledger in the RightRev, but this way you get all the detail in the GL, kind of like the best of both worlds.
And actually, our biggest limitation there is actually the ERP. It's the NetSuites of the world, because they still, even with the ability to support large volume transactions, it still can take quite some time for them to be able to actually digest and process those journal entries.
That's because the APIs for Sage and Oracle were built like 20 years ago, and it's still running on that. It works
exactly,
I guess.
And so if a customer is willing to understand that there are limitations on maybe the time, you can definitely get as much detail as you need.
So like it'll just take a while to run is what'll happen.
It'll happen instantaneously for us. Again, it's really all based on that.
Posting them into the GL will just depend on the rate limit of the app. Yeah.
Exactly.
Got it. So maybe you run it like before you log off at night.
Exactly.
Come back in the morning.
And it is something also that we can schedule too. So
cool.
If you needed to do it like at night over while everyone's sleeping, we can set that up.
Yeah. Well, it'd be nice if accountants could get some sleep every now and then.
Yeah.
Right. We support that.
I agree. I agree. One of the reasons accountants don't get sleep is their month-end close. And so that is something that we're actually trying to solve for as well. And so, like I mentioned, with being a subledger, you do want to be able to lock periods and do things like that. So we do have a strict close process for all of our legal entities. And for us to actually close the books, it's just a 3-step process. We're going to review any sort of errors that might have come through. Because we're dealing with integrations, that's always a possibility. We have error tracking reports from the APIs, error tracking reports from any sort of like manual uploads or anything that you might do. So we'll go through that process, mark that as reviewed once we're finished fixing errors or just reviewing them and being satisfied.
And what kind of errors are common?
I would say the most common error we receive is we get a new product. So someone upstream created a new orderable product, but we don't have a revenue treatment for that here in RightRev.
Got it. So we got to go make that, set that, configure that then when the error goes away.
Exactly.
Gotcha.
The next thing we're doing in this close process is reviewing any revenue that we have on hold. So we do support users putting revenue on hold for whatever reasons they need to. So a lot of times that's due to like payment. Maybe a customer hasn't paid. We don't want to recognize revenue and risk potentially having to pull it back in the future if they never pay. So we do a flag here to have our accounting teams review these hold items, because maybe the reason they were initially put on hold no longer is applicable. We can release that revenue and still do recognition in the open month that we're in. And then the last step for us is actually rerunning that journal entry process. So we're assuming that journal entry maybe was run 2 days ago. We might have some activity that's happened since we last ran that. This is just going to flag and say you actually had some unposted revenue from November or prior periods. We recommend that you post that before closing the period. Once that's done, and it's actually telling me as I click through that I have an unposted journal. So we're getting an error right away. But once that error is resolved, this close period button populates for me, and then I click that. It will close November and then automatically open up the month of December for us to start processing.
And then I just have to make sure that I lock my ERP system as well to prevent any changes in there. Although I suppose if I'm doing all of this in RightRev, there's not really much that could go wrong in the GL.
So unless you're doing some sort of manual process there, we should be able to kind of lock your revenue.
Right. Because you're just posting journal entries, and if I use the summarized journal entry, it's very easy to see if anyone changed that.
Exactly.
Nobody's going to go in and, well, hopefully nobody's going to go in and change that. So
what I like on this screen, Andrew, is the gamification, the psychology play you have with the little happy face and telling you will save 1 day and 7 hours if you close now versus last period. It kind of helps motivate your team. You're always going to want to, exceed that. Now, does the emoji, the happy face, get sad if you go over the previous period? But it's really smart to gamify and motivate your team to go faster.
I was hoping to show you that. I don't have one that's a negative right now, but yeah, it does go into a red frowny face if you go over your previous kind of trend. So it's just a funny thing, but yeah, you're right. It's the psychology behind it to kind of motivate. So that's our close process. You kind of brought up a good point for me, Blake. What are those changes that might take place when we lock the period? So a lot of times what we hear is that even though we're doing all of those journal runs here in RightRev and posting them into your ERP, some companies have a need to do what they'll call like a topside adjustment for revenue purposes. So it's like a manual revenue allocation or adjustment that they're doing. We have the ability through this manual journal process to actually create those journals here in RightRev, still sync them into the ERP, but that way, again, we're housing your entirety of your revenue data as opposed to just that transactional level detail too.
That's awesome. So my adjustments can also happen in RightRev. I have it all in one place.
Exactly. And that way your reporting reflects everything. All right. Moving forward, I'm going to show some of that configuration now. Again, we're very rules-based in how we're handling everything. So this is extremely important detail into how we actually set up the system and have that kind of set it and forget it capability. So the first we touched on is our identifying customer contract. That's where we do those grouping rules. This specific demo org, it's rather simple. I have a specific grouping ID that we're using, but a lot of times this might be customer name, customer ID. Maybe it's a specific legal entity, or again, region, or whatever it may be. You can choose these criteria, and these are just any of the metrics that you're providing or that we're layering in. So you're able to choose any of the criteria within the system, layer that in as an identifier. So then every single time the same legal entity and the same grouping ID is used, it's going to group those into a singular contract as opposed to creating new. We touched on the revenue rule process a little bit. This is actually where we're housing all of those rules. So I mentioned the idea that typically our standard process is to do a revenue rule by product. So for every single product in a customer's catalog, we'll create a specific revenue treatment for that. When we do that, we're going to take in that product name. This really is just how if it's the SKU or whatever that information is that's being passed from your upstream source, we're going to name that revenue rule here. We're then going to choose that trigger. So we can trigger revenue on billings, bookings, user-defined events, which is that just event-based process, manually, which is something I still have never seen. If you're going to automate, why then trigger everything manually? It doesn't really make sense. But the last one is actually a newer feature for us, and it's our hybrid rule. And this allows us to create, again, some more criteria, some more configuration where we can trigger portions of a singular line item with different revenue triggers. So we might have a product where maybe upfront we want to release, we'll say like the list price. We want to release 60% of our list price and do that recognition immediately. So we can set that up here, and then we can configure the remaining 40%, we could do ratably. So this hybrid rule allows us to really, again, just configure without that customization and be able to take your existing data and do a lot with it.
This is really powerful because the line items on the orders aren't always perfectly defined to line up with the revenue treatment that's required. Yep. So this way I can basically split out a line item into the correct line items without having to go back into my order management system and rework all the contracts.
That's exactly the reason for it. And that's just one of the ways we actually can solution for that. We additionally have what we call bundle configuration, or I like to use the term bundle explosion, where we can take that single parent product and explode it into multiple children products with different revenue treatments for each of those. And we can do that all through rules-based automation.
That's amazing.
Yeah. It's, again, really
it feels like you've thought of everything.
We're getting there. We definitely have some things in our roadmap that we're looking to roll out, but we feel really good about what we can offer.
So, okay, I'll let you finish the demo, and then I have a question about like the customers, but please continue.
Yeah, no problem. We're coming up on the end here. I just have some of this configuration. We touched on that being product-based. I described this earlier. This is the same exact process, but we can do things rules-based. So we can say, instead of doing it based on the product itself, we can set up specific scenarios to say this revenue rule applies to these scenarios. I had mentioned the user-defined events quite a few times. We do just have to define what an event is. So as I mentioned, we have the ability to take in percentages, quantities, amounts, formulas, whatever it may be. You just define that here as a part of this event process. And then those API calls are what actually drive the release based on these triggers that we've set up. And then we talked about bundle configuration, contract amendments. We've talked about those things quite a bit. So the last thing I want to touch on is our SSP configuration. So this is where we actually create all of those standalone selling price policies for you. Now we have 3 ways that we support these. The first 2 are, I'd say, rather standard from other revenue tools. The last one is one of my favorite things that we have in the platform. But first, I'll start with the other 2. So when we're configuring your SSP, the first method that I typically would go through is a formula-based process. So that's what I've used in the example that we looked at today. We're saying our formula was as simple as our list price is our SSP price. We then have the ability to add like a range, because sometimes SSP isn't as simple as saying it's a singular price. You might give a range where as long as we're discounting within 10%, we can use that as our SSP range. From there, you then define the criteria. It could be product specific. That's a lot of times what we see from an SSP policy is that every single product has its own policy. We'll just say it's product ABC. And then the last configuration here is determining what we call the midpoint we're going to use from that range that we created above here. So if we're below the floor, let's say we discounted 15%, we're below that floor, do we want to still use that list price truly as our SSP price? Or do we want to use what would be that list price at a 10% discount as our SSP? So again, just gives a lot of configuration to fit all of those different rules that customers might have, different reasons they might do the setup. And we can say we want to use that below midpoint for any time it's below the range. We'll use that midpoint when it's within the range, and above midpoint when it's above that range. It's a lot of different things. And then it would ask for a name. The next process is an upload. Very similar. You choose your criteria here. It's going to then create a batch entry. We will give you a CSV template to populate. This allows you to just do like bulk processing of those formula policies, essentially. So you can create a number of product-specific policies at one time, as opposed to doing a lot of different clicks. And then you can just upload those, have them approved, and begin the process of utilizing those. The last one is our SSP calculator. So these first 2 processes still require our customers to do all of the analysis behind their SSP on their own. So they're having to still determine what that SSP price truly should be based on the historic selling trends, based on other criteria that they have. Maybe it's a cost plus margin type approach, but they're still having to do all of that work. With our calculator process, you're going to define the criteria that we're looking at. And then I'm going to click down into one that we have here. Once that's created, it's going to then search the entirety of our platform using your historic data that's housed in RightRev to determine what your SSP prices are going to be based on the criteria that you set. So this is based on the product name. We can see in this example, I've got 3 different products that we've been selling that we're using to create the SSP. The system's searching those transactions, and it's actually defining all of those midpoints that we would expect. So we're actually saying 64% of, in this case, list price, which is one of the metrics that we used to define this, is our SSP. So that's for that training product. But we have a range of 10%. So we're saying 54% as the floor, 74% as the ceiling. The nice thing here, and the kind of gotcha moment, is this is the actual analysis that's being done. So this is our bell-shaped curve that defends that policy and shows that our midpoint here is at that 64%. This is where all of the transaction, this is that kind of average for all of that information. So we then have sorry, you have a question?
No, I was just saying that's really cool.
We then have the ability to download all of the transactions that take place and build out this bell curve. And we can say we know there's some outliers, and we can actually exclude certain things re-push that information back into RightRev and recalculate these policies. So it does a lot of that activity for our customers, saves sometimes weeks, months for all of the analysis that comes into play. So yeah, that's RightRev in a nutshell.
Awesome. Well, I have a question to kick off the Q&A, which is, what types of businesses, in your experience, Andrew, get the most value out of RightRev?
So it's a really good question, and I would say we're not necessarily industry specific. That being said, we have had a lot of success in the tech world, the tech space. I think a lot of times that SSP policy process is a little more prevalent in that industry. Mm-hmm. But really just any customer that's working in manual processes, doing a lot of volume processing. Like I said, we can support kind of, I don't want to say infinite number of transactions, but a very large volume of transactions, or just complex processes in general. We're built to kind of handle the most advanced use cases.
So give me an idea then of like revenue size of RightRev customers or headcount. Like I'm just trying to get an idea of like what size of company is using RightRev.
That's a great question. I would say our target market might be in that mid-market enterprise level, but we do have customers lower than 10 million annual revenue. Okay. So again, it's kind of based again on that complexity, because not revenue volume doesn't necessarily equate to ease of process. You might have a very complex revenue process that you have to adhere to, but your revenue is only $10 million. How are you going to solve for that without doing manual? And so we can help you there.
Makes sense. Go ahead, David.
Oh, so a question came in wanting to know how RightRev's different than NetSuite's ARM.
Yeah, I would say that kind of goes to the fact that ERPs weren't built for revenue recognition. ARM is a module that was built as an add-on, so there's some limitations there as far as what it can do. Again, a lot of that can deal with like the integrations that you have to get the information from. Sometimes those APIs, as we alluded to, aren't the best. The ability to handle things like contract modifications and changes over time is an area where we really can kind of set ourselves apart. But also then that volume, being able to handle all of the transaction volume that we can, is another thing that really helps distinguish us. Excuse me.
What does your implementation process look like? How long does that take? Because I think at the beginning you mentioned we can integrate with basically any system you've got. Mm-hmm. That must take a little bit of time.
Absolutely. I'd say there is not necessarily a standard, because it does vary so much customer to customer based on those integrations that we need to build out. On average, I'd say between that 3 to 6 month range, though. Okay. And a lot of times what we see is customers that are looking at a revenue tool might also be looking at a billing or ordering tool at the same time. And what I'd say is, if that's the case, we're never going to be the long pole in the tent, so to speak. We're always going to be able to fit our processes within that overall implementation schedule.
And to tack on to that question, is this something that your team does for clients, or am I going to be looking at hiring a third-party value-added reseller that's a RightRev implementation specialist, et cetera?
We actually have both options available. So again, especially on our Salesforce side of the business, we work through a lot of the SI partners there, and have partnerships where they can come in and actually do the implementations for us. But if you want to work directly with our team, we also offer that as well.
You mentioned that there is a limit on transactions. Is there like a hard upper limit?
We actually haven't run into it, and that's why I said I don't want to say infinite, but we haven't run into what that limit would be.
Well, if somebody from Netflix is watching and wants to implement RightRev, I'm sure you'll find out. Or maybe Starlink. I heard that Starlink is probably going to be the largest subscription business on the planet.
I can believe that.
Yeah.
We look open to hearing from them.
And they've got hardware. They've got services. They've got software. They've got internet they have to provide. They got satellites.
And they probably have users that start their subscription, cancel it, start it again. I'm going to travel this summer, so they restart their subscription, then cancel it. A lot of that dance.
Yeah, they need new hardware. Got to allocate all that, right? That'd be fun.
Definitely help them with that complex process.
Well, I'll give Elon your number when he asks me for a recommendation. How about that, Andrew?
Sounds good.
Well, that is about it. Is there anything else that people watching should know about RightRev or how to get in touch with you, Andrew, or the team?
I was just going to say, I think that would really be the only other thing is, oh, you're flashing it for me. RightRev.com. You can go and see we have a lot of material out there, a lot of content around different revenue practices, how to kind of solve for different things. But that's also where you can go to request a demo and request more information from us.
Thanks, Andrew, so much. For everyone who is joining us live and watching on demand, wherever you are, stay tuned for a quick message about how you can earn free continuing professional education credit, NASBA-approved CPE, for attending this session. We'll see you around at a future Earmark Expo. Bye, everyone. Today's event has ended. To earn CPE, go to earmark.app or scan the QR code on the screen. Then log in or create your free account. Search for the course by tapping on the magnifying glass icon on the home screen and then entering the name of this event. It takes a few days to make the course, so if you're attending this event live, keep an eye out for an email letting you know when the course is available. Pass the quiz to earn your CPE, then tap the button to email yourself a certificate. Stay tuned for more events from Earmark. Thanks for joining us, and we hope to see you again soon.